Hi, everybody. Again, I'm John Bowens, Director of Education and Investor Success here at Equity Trust, broadcasting from the Equity Trust virtual classroom. So first, what is a solo 401k? Well, when you hear the term solo 401k, you might also hear the term individual 401k, or on the IRS website, you'll see one participant 401k. This is a 401k, just like a company you would work for, but it's for one participant. You'll also find that there could be more than one participant under the plan. For example, could also be your spouse. So you as an employee and your spouse. But for all intents and purposes, this is for self-employed individuals. So if you're an individual, you're self-employed, that might mean that you are John Smith doing business as John Smith. Or maybe you have a limited liability company structured, or maybe an S Corp structured, or corporation, but you're self-employed. So you're declaring earned income on an annual basis. You're paying taxes, Medicare and Social Security tax, known as payroll tax. And you can then use that earned income to support your annual contributions to a solo 401k. So in conclusion, a solo 401k is just like a 401k with a large company you're working for, but it's for you as a self-employed individual. And it's for individuals that don't have any employees. That's one of the prerequisites. You can't have any employees, any W-2 employees, with the exception of yourself, of course, because you're an employee of your own business, and then also a spouse. There's this interesting exemption which allows a spouse to also participate in the 401k working for your business. All right, you do have to be mindful of the fact that if you have other businesses with employees, your self-employed business and those other businesses could be considered to be in what's called a controlled group. So you can research that term controlled group, talk to your CPA to determine if you're in a controlled group or not, because you do have to be mindful that you can't discriminate against employees of another company, not giving them a 401k benefit if you're giving yourself a 401k benefit over here within your self-employed business. And so the next one here in the virtual classroom, keep leveraging compounding interest in the absence of taxation.